My name is Nicole Mjoli for those of you who don't know me, and for those of you who do, welcome back. I hope you guys are doing well. Today's video is going to be a continuation of our mini tax series, and this specific video is going to be focused on interest tax Monamo South Africa. I have to shop a disclaimer Nyana, because we don't want to get in trouble or none of that. So guys, please, I'm not a financial service provider, right? I'm not. I am just here sharing what I've learned with you guys, hoping that you guys will actually learn from it. If you don't want to learn from it, just take it, leave it, throw it away, roll it up, throw it in the pen, whatever you want to do with it, right? So if you are looking for financial advice, please speak to someone who's registered with the FSCA. I am not. I'm just sharing info. So if you like this video, don't forget to like, share, and subscribe. And let's get into it. So what exactly is interest tax? Okay, firstly, let's break it down. You have interest and then you have tax. We all know tax is the part where SARS comes and they want the money on profits or gains that you made on money, right? So interest, we know, or some of us know, that interest is that extra money that you earn from either your savings account or banking, from if you deposit money into your broker account like Easy Equities, for example, and you don't use the money. That's another way in which you earn interest. Your government bonds is another way in which you earn interest. Cash, which forms part of a managed portfolio, earns interest. Your real estate investment trusts earn interest. And then also, if you have a rental property, you earn interest, right? So that's just what interest is, not to be confused with profits that you make from capital, from investments. But we'll get into that in another video, right? So basically, that's what interest tax is. It is tax, which is applied to your interest, which is earned in the ways that I've mentioned, right? So now that you know what interest tax is, let's get into how interest is taxed in South Africa. So I'm going to take it back a little bit. Some of you might know, in South Africa, we are taxed according to the tax tables, and they change every now and then. So I'll attach a screenshot of the current tax tables, and on the tax table you'll see when you earn a certain income, then you are taxed according like a specific percentage. So we are taxed on a sliding scale, meaning the more you earn, the more you are taxed. I know it sucks. So people making like your millions there per annum, they are taxed higher. Employees, at least, they are taxed higher than your people who are making your 200,000 per annum, right? So this percentage which you find on the tax table is called your marginal tax rate. Why is it important? I know we're talking about interest tax or tax for investors, but why am I talking about employees? I'm talking about employees because this table is mostly used like when you work again. That same percentage will apply to your interest tax. I know some of you might be like, oh my gosh, but I don't work, I'm at work. In your case, you'll just take all of your taxable income. Taxable income is basically just like your income that you make, right? Minus all the deductions or the exemptions. I'll explain what exemptions are, and then that will give you your taxable income. So your taxable income will be taxed according to that percentage, right? That marginal rate, which is the one on the table. So for example, let me make an example so that you guys don't get confused. My head is all over the place. So let's say I'm taxed 18% for my salary. My interest tax will also be taxed 18%. But remember, with the salary, your employer will keep your chelete, and with your interest tax, you need to make sure that you declare to SARS, I earned this much interest and wara, and here is my tax certificate. And you'll see on the Easy Equities platform, you can get your tax certificate over there, right? So salary tax, pay as you earn, is deducted from your salary already, but your interest tax, you need to make sure that you pay to SARS, right? And it will be the same percentage as your salary. If you don't have a salary, then you can just look at how much you earn on the table and figure out where you fall inside that table, so that you can put the money aside for when you are doing your returns. You can patala SARS the money, right? It is, however, important to note there are T's and C's to this, terms and conditions, right? So one of the conditions, you have what you call exemption and you have what you call deductions, right? So deductions are basically like your expenses, your important expenses. There are specific expenses which SARS is like, okay, no, you can keep the money for that expenses. So before they tax your money, remember I talked about taxable income, they will remove the deductions and the exemption. Exemption is money that isn't taxed. So SARS will be like, okay, you earn up until this amount of money, and then you can keep that money. You don't have to be taxed on it. After that money, then you will be taxed. So currently in South Africa, that exemption amount is 23,500 for people under 65 and 34,500 for people over or 65 and over, right? So let's say you make 300k per annum. They'll be like, okay, the first 23,500 we won't tax, so remove that. And then obviously the deductions, whatever expenses you had, which SARS doesn't tax you on, they'll be like, remove that. And then whatever remains will be your taxable income. And then they'll take that amount of money and they'll apply that percentage which you fall under. Let's say it's 18%, or actually the one, just second, I don't know the numbers out of my head, but let's just use 18% as an example. And then they'll say, okay, that 18% we apply it to here. Let's say they get 40k and they're like, 40k sounds so high, but anyway, let's say you get 40k and then they're like, okay, Rona, we take the 40k, you can keep the rest of the money. So basically that's how your interest tax is taxed in South Africa. Interest tax is taxed on that table. Table A is very important, and we're going to be using that table also in one of the other types of tax, but we'll talk about that when we get there. Anyway guys, I hope you enjoyed this video and I hope it made sense. If there's somewhere where I now or you didn't understand what I was saying, please don't forget to leave a comment and tell me exactly what confused you. Maybe I was babbling too much or something and I'm doing it again. Anyway, I hope you guys enjoy the rest of your day. Don't forget to like, share, and subscribe. And if you don't want to, that's okay. I'll see you in the next video. Bye.